Good day to all of you. Today in the Jana's coaching class, we have to see the journal entries. How the journal entries has to be prepared. What is journal entry? What is bookkeeping? What is accounts? These terms we have to see. See, the record of keeping the books is bookkeeping. The making the transaction in accounting form is called accountancy. So here in the form of journal entries, we have to make which account has to be debited and which account has to be credited. This in the previous class we have seen all this one. Just for here 7 examples. In the 7 examples we are seeing very clearly. Now in the books of Mr. Murugan, cash invested in business rupees 25 lakhs. So in this enterprises, in this organization, Mr. Murugan has invested cash invested in business rupees 25 lakhs. This is all are illustration only example. So 25 lakhs. So what is coming into the business? Cash is coming into the business. So debit what comes in? That is the cardinal rules, 3 cardinal rules. Yesterday we have seen previous class. What is that one? Real account. Debit what comes in? Which is coming in? Cash is coming in. So we have to debit cash account. Cash account debtor. DR represents debtor. Debit. To what is the formation? This is for capital purposes. The entrepreneur, the proprietor is invested the money into the business is called capital. So for the purpose, this is capital. Cash account debtor to capital rupees 2,50,000. Here I mentioned as RS. So nowadays the government of India has changed the logo, that is the this one as instead of this RS you have to put particular symbol, you have to put it. Cash account debtor rupees 2,50,000 to capital account credit 2,50,000. So the narration you have to write as within bracket being cash invested in business, like that you have to enter. Then the second one, Mr. Murugan purchased goods rupees 2,70,000. Goods is coming in. Debit what comes in? Goods is coming in. Purchasers account debtor to cash. That is, if you are paying by cash in the form of cash, you can credit this cash account. Otherwise, if you are issuing a check or making the payment through bank transfer, you have to credit bank. Purchasers account debtor to cash or bank, whatever it may be, according to the transactions. Amount is rupees 2,70,000, 2,70,000 credit. Third transaction, sold goods to Guru on credit rupees 4,30,000. So after manufacture the products, the finished products has to come for market and the product has now sales to Mr. Guru on credit basis. Credit basis means Mr. Guru will pay the amount for the goods after 2 months or 3 months or 6 months according to their agreement. Guru's account debtor, debit the receiver. This is the personal account. Debit the receiver, credit what goes out. So here Guru's account debtor rupees 4,30,000 to sales account rupees 4,30,000. Fourth transaction, furniture purchased rupees 50,000. For this business, Mr. Murugan is the entrepreneur. He is purchasing the furniture for rupees 50,000. So the transaction is what is coming in? Yes, correctly. Furniture. furniture is coming into the business. So debit what comes in? Furniture account debtor. Credit what goes out? If you are having thousands of rupees in cash form, then you can mention as credit to cash. Or if you are making the payment by check or through NEFT transactions or whatever it may be for bank transaction, you have to credit bank 50,000, debit 50,000, credit 50,000. For everything, the narration you have to enter being furniture purchased for cash or bank. Okay, through bank transaction like that. Fifth transaction is salaries paid to workers or officers, rupees 3,60,000. Here, debit all expenses and losses. So, your salaries is an expenses to the entrepreneur, Mr. Murugan. So, salaries account debtor, credit what goes out? Bank or cash. This is 3,60,000. Being salaries paid. Then sixth transaction, cash deposited to bank. So, some amount is deposited to the bank by the Murugan. So, debit the receiver, bank is the receiver. Bank account debtor, you can mention the name of the bank. If in the question paper, if the bank name given, you have to mention so that bank, X bank. So, bank account debtor to cash or bank. Bank account debtor to cash, rupees 70,000. Cash is going out from your pocket. Then, this is cash deposited to bank. Narration is being cash deposited to bank. The seventh transaction is cash withdrawn from bank. Cash withdrawn from bank means what is coming into the business? Cash is coming into the business. Debit what comes in? Cash. So cash account debtor 35,000. Credit the giver. Bank is the giver. So to bank 35,000. Being cash withdrawn from bank. This is the journal entries narration. So journal entries means what are all the criteria you have to see. Number one, you have to closely watch the transaction. What is that transaction? You have to completely read. That is whether it is on cash basis or credit basis. Each and everything you have to grasp in your mind. That then only you can form the journal entries. If you form the journal entries, the next step is ledger postings. That we will take next class. Then you have to balance the ledger balances, then trial balance. Like that, you can easily take all this thing. You are all very intelligent people, I know. So, in this class, Jana's coaching, now we are concluding this part as journal entries. If you are having any clarifications required, in the description box, I am given my contact mobile phone number. You can contact me through this description, the comment itself, or through WhatsApp. You can ask any clarification you ask. This is useful for +2 students, BCom, MCom, and all professionals. Even now, some of the professional people also, to form the journal entries, they are facing some difficulty. So, while you are going for any job and all everything, this forming of journal entries in the interview session, if the person asked the transaction is sale of goods or purchasing goods, rupees this much, what is the journal entry? If in the company, if they ask the question, some people they can score the marks, but due to some lapse of time and this one they can forget. So this is continuously practice. You have to all in writing, not only grasping in by watching this video, but you can practice. You can illustrate your own ideas by forming the journal entries. Like that, if you done, the victory is yours. Namaste.